morning, ladies and gentlemen, and how do you do? I'm your host, Seth Julian, welcoming you to today's session where we're going to talk about the U.S. dollar. That's right, the greenback. We're looking at the U.S. dollar index. This is a future of a trade-weighted basket of 6 currencies against the U.S. dollar. And it's very, very simple and intuitive. As the index goes up, or I should say, as the dollar strengthens in world markets, this index goes up. It's as simple as that. And this blue square shows us that since the outbreak of the pandemic, the dollar fell, and as the entire world fell, all charts of every asset around the world after the end of the first quarter of 2020 has this fall. But the dollar regains its strength about here last April, and boom. And why is that? For the simple reason that once inflation kicks in as a result of the tremendous stimulus that is poured onto the world's economy, particularly by the developed countries, in order to rescue its citizens and its economy, it unleashes inflation. At this point, the Federal Reserve, the Central Bank of the United States, understands that in order to control inflation, it must raise interest rates. The raising of the interest rate is what strengthens the dollar. It's simple calculus. As the interest rates payable to dollar deposits rise, the demand for dollars from currencies that have lower interest rates rises. So people take their yen, and they take certainly their yen. They take their yen, their euros, their pounds, their Swiss franc, their whatever currencies they are possessing, exchange them for U.S. dollars and simply park them in dollar accounts to benefit from the interest rate. It's called the carry trade, and it's quite common. And that's it. That's the whole story here. But what's more, in our opinion, is the high likelihood that this is going to continue. This is a daily chart. If we drill down to a 4-hour chart, we see that little dip is well behind us, and we're on the way. It dipped down to the 200-day average. It skipped back. This goes back to about, I guess, must be about a week ago, a little more than a week ago. It recovers, and it's still moving up. I might add, declining volume, which is not a very encouraging sign. Nonetheless, it's positive, and we think it's going to definitely follow through. If we look at the 1-week chart, of course, it's there's no doubt about this. However, there you go. So on the 1 week, on the 1 day, this is a very positive trending chart. The volume on the daily chart is increasing. The force index, of course, is in positive territory, and that's really all we need to say. U.S. dollar is strong. We saw that the jobs report out last Friday. For those of you who attended the NFP live trading event, we did very well on that because it came out very positive, 260, 263 or so, expecting 250 million, 100,000 jobs added, 250,000 jobs added to the U.S. economy, something like 60,000 of them in manufacturing. All very positive for a robust U.S. economy, all not likely to discourage the Federal Reserve from pulling back its interest rate hikes, i.e. they are going to continue, and therefore we think that it's highly likely that this is going to continue. So, ladies and gentlemen, that is our position for today. I'm your host, Seth Julian. Wish you all the ability, ladies and gentlemen, to trade with confidence. Bye-bye for now.